Good afternoon, everybody. Ryan Heckenberg, Keller Williams with the Home Group. Hey, Britt and I are just reaching out. We're getting a lot of questions around this property tax evaluation, what their options are, how were these assessed, and so on. So we're just trying to provide some insight to those questions. So my part into this is just going to go over with you guys on how the real property valuation was established, what the different tax rate is, what the mill levy is, and how that those items come in to calculate your yearly estimated tax payment. So before we jump into this conversation, let's get into the basics of our property and tax structure. I'm going to share my screen real quick. So with this, the starting point of the conversation is really around the real property notice evaluation, and specifically the current year of actual value column, which is what establishes your home's value, and which is the number that is related to why everyone is in shock, and specifically the number that you have the right to appeal. Now let's get a little bit of the background on this current year actual value and how that's created. So in Colorado, Colorado reevaluates properties every other year or every odd year, so 2023. Upon this determination, your home's value is actually based off of comparable property values from the previous 2 years. Let me come down here. So those comparable 2 years are actually determined based off of property values and sales from July 1st of 2020 through June 30th of 2022, not today's values. And those taxes will actually be payable in 2024 as property taxes are paid in arrears. And when property taxes are payable in 2 ways. One, it's a lump sum payment due April 30th of that year, or you can do 2 installment periods due February 28th and the second payment due June 15th. However, my guess is that most people don't even recognize property tax payment dates because your mortgage service provider pays your taxes for you as part of your mortgage and escrow accounts. So moving on, we need to understand that property values are being established at the county level, but the tax rate is set at the local government and taxing entity level. So taxes are not finalized until December of each year. So I'll show you that real quick. This is just a piece of information that came off of Jefferson County's and Colorado's website. So Colorado statewide property tax assessment rates for 2022 through 25. The highlighted parts are kind of the interesting pieces. What I wanted to bring up here is all residential property, including single family homes, will be reduced from 7.15 last year to 6.95 in 2022. It will go to 6.765 for the tax year of 2023, along with the first 15,000 of actual value being exempted. We'll talk about that in a minute. And the interesting thing is the tax rate for 2024 is not even known yet. And for 2025, the tax rate is going to go back up to 7.15. So here's just kind of a brief breakdown of single family and multifamily residential rates. So in 22, it was 6.95. We had a little bit of a drop this year in 2023, payable next year at 6.765. 2024 taxes payable in 25 are yet to be determined. And 2025 taxes that will be payable in 26, we're going to see a tax rate increase going back up to 7.15. Now we'll kind of get back into the current actual value and how it's created. When we realize a couple of things, let me come back up here. when we get this notice, we see current year actual value, and the majority of people are thinking that is the value today, which is not the case. Knowing that that is actually value from property sales back from 2020 to 2022, that column is kind of misleading and mislabeled and should be read something more of actual values as of 20 to 22. But needless to say, that is the number that you can appeal. That's the number that is setting the value for your taxation. So the second piece that comes into that is we have our current value now created. We know where our tax rate is coming from. That's set up from the state. The third piece that comes into your yearly property tax is going to be your mill levy. Now, to get your mill levy, where you would get that is you can just go to Google. You can just type in Jefferson County Assessor. We'll go to this first one. We will wait for it to load. So here's the assessor's office, this site for Jefferson County. This site has some good information if you guys want to take a look through it. But what you'll go to is property records search. Then you'll come up here and you'll do address, owner name, however you want to tag it. I'm just going to pull up a random property just for verification for the sake of this exercise. So I'm going to pull up this property at 8015 Flower. This property gives the address, gives property owner information, lot and block information, previous sale info, and here's your property valuation. So your property valuation, you've got your taxation, as well as you can view your property tax notice that you got in the mail and as part of that little hard postcard that they sent. So that's the notice. And more importantly, we get into the mill levy information. So this is going to be where you get the information specific to your property on the mill levies that are charged to your property. So let me come back here. So what I want to get into is what is a mill levy? The mill levy is a property tax. It's applied to the property based on the assessed value. The rate of the tax is expressed in mills and is equal to $1 per $1,000 of assessed value. The mill levy is calculated by determining how much revenue each tax jurisdiction will need for the upcoming year to fund its budget for public services. So funding for public schools, maintaining parks and recreation areas. The revenue is then divided by the total value of all properties within the area. Finally, that rate from each jurisdiction is added to the tax rate to obtain the mill levy for the entire area. Thus, the mill levy varies between state, city, subdivision, and local taxing authorities such as Metro District. So for the example I just had up, my computer's jumping around here. So for the example of this exercise, we're just going to run that this mill levy for this property, 2022 payable 23, the mill levy is 124.25. Okay. So we take that mill levy and we put it into our equation here. So we then take to get what we're going to get here is the full yearly tax payment due. So we take our assessed value of 800 value, excuse me. We take the current value times the tax rate, we get the assessed tax value. We then take that assessed tax value and we multiply it by the mill levy rate. And that rate is then what determines your yearly property tax. So with that, for the example of this, if and for the example of what Brittany and I are trying to help with, if we can appeal our current property value and say, hey, that's too high, even for the time frame that is required. Say we were to get $50,000 in a different valuation. So instead of this property being valued at 800,000, say it's valued at $750,000. We're contesting 50,000. That difference of this going to 800,000 to 750,000 would only save $420.28 for the year, or $35 for the month, right? In reality is what we're seeing is a lot of these property values are within range of what property values were for the time. And really what that means is that these high tax rates are here to stay. And winning an appeal can be daunting, but if you succeed at it, it can help soften the blow, most likely anywhere from 20 to 50 bucks a month, depending how much your rate went up. And so anyways, yeah, coming back down to here, the 2024 taxes aren't even determined yet. That will be determined based on the end of December of this year. And what we have to look out for is, regardless what happens, we know with certainty that the tax rates are going back up, payable in 2026. So in our example above, if everything else stays the same, everything else stays the same, but the tax rate for payable for 2026 comes up to 7.15. So if our property stays at 800, our tax rate payable in 2026 goes up to 7.15%, and our mill levy stays the same, our tax rate is going to rise $382.69, or about $32 a month. So just kind of playing around with how the tax rate will affect it. But the reality is we experienced a large, drastic jump, and this is kind of going to be a new normal for us. So anyways, that's how the taxes are graded and assessed. A few things to actually look at. Your actual taxes will most certainly be lower than the estimate. The assessor's office does not determine or calculate taxes. Their role in a taxation is determining the value of your property only. The tax rate, which is currently 6.765, is determined by state legislature and taxing authorities. And in 2022, legislature passed a law requiring the assessor's office to include an estimate of taxes based on the notice of valuation. So Jefferson County is not the expert as the taxing authority. They're just doing their best job to figure it out and give us an idea of what to expect. If you have an approved senior or veteran exemption, that exemption is not identified in your valuation, and you can deduct that from the amount of the estimate that's on your taxes. And most residential property owners are exempt from paying their first $15,000 of actual value, which equates to about $10 a month or $120 a year. That exemption is also not taken into account with this notice. We also are still waiting to receive official notice from legislature that may pass as a bill to lower the assessment rate or to raise the standard exemption, maybe both. If you're in a metro district, some metro district mill levies have not yet been identified with the new tax estimate. So that rate can go up or down depending on your metro district or taxing authority. And just kind of a general note, Jefferson County has more than 200 taxing authorities that collect property taxes to fund various services. So for Jefferson County, it can be quite cumbersome. And then for just a realization is that property reevaluation will occur again May of 2025, where those value determinations are going to be based off of today's numbers. So the reality is even our property valuations that we're all having a heartache about today is actually only going to get worse in 2025, because property values are actually higher than what we're seeing here. So anyways, that's just our new normal. Hope that helped a little bit, just kind of explain the basis behind it, how to identify where that basis comes from. And if you guys need any help with identifying comparable properties, just have some general questions about the whole process. It is a daunting thing for anybody to go through. but we would be happy to help you through it.